And welcome back to Morning Trade Live. We're live in Denver. This is the Schwab Impact Conference, 5,000 people, so many interviews special for you today and tomorrow. I'm Nicole Petaliti, so glad to be with you. Joining me right now here on set is Matt Camuso, head of ETF Solutions at BNY Investments, to tell us a little bit about ETFs, where we have seen record inflows. Is that right? Tell me more.
That's right. And it just keeps happening. So I feel like every year we almost sound like a broken record talking about yet another milestone, both for the broader ETF industry, but then specifically for active ETFs. The US ETF industry just hit 13 trillion in assets, which is really astounding if you think about it, because less than 5 years ago it was at 5 trillion. Within that, you have active ETFs that just crossed $1 trillion in total assets under management. This year, another record year from flows, coming off a record from last year. So it's really just about the new wrapper of choice, which is ETF for both active and passive.
I do want to talk more about what is the draw on ETFs, what kind of ETFs seem to be working. Have you sensed any outflows most recently with some of the volatility, even though the markets are right near the highs? Are you sensing any outflows right now too?
So for our platform, no, but I think it's interesting when you look at ETF flows because, a lot of people would say the market is, at all-time highs, so that's what's propping up the ETF market. Not entirely true, because you have treasury bill ETFs, you have inverse ETFs, so they're really just a trading tool. So if you see an outflow from, say, maybe US equities, you're maybe seeing that into an ultra short bond, a more conservative kind of risk off approach. Right. So ETF flows broadly really don't get impacted because there's so many different options from an asset class perspective to use the ETF wrapper depending on your kind of macro outlook overall.
I think it's very interesting how you said, ETFs were not really a thing, and then they really came on, big time. And it's active versus passive. Have you found that the actively managed ETFs, which ones? What kind of things are people looking for? I mean, just don't say, what's really happening in active? Why do people want those?
Yeah, so I've been in the ETF industry for over 12 years. I come from a day where I remember saying, do you use ETFs? And people would say, no, I use active management. Today that doesn't happen, right? Because we have this adoption of active. It's a really good question of what type of active, because there's a lot of different kind of trends we're seeing in the market right now. You have your single stock levered ETFs that are active, and then you have your taxable bond kind of active fixed income. So far this year, taxable bond active ETFs are leading in flows, 110 billion. I think twofold. One, choosing active and fixed income tends, if the data shows, to be a good approach. The other thing I think we're seeing is there's just a lot of product coming to market for the first time that's finally seeing interest. So you have over 600 active ETFs launched just this year. Over 2,000 if you look at the past 5 years. Yeah. So I think it's just people finding now the ETF wrapper that's boosting active. But if you had to look at the flows, it would show us taxable bond is by far the winner so far year to date.
It's so fun. Everybody's always looking for something tax efficient, right? I mean, what percentage of the folks? Most of them are probably asking for that, right? What are some of the things that work? What do you recommend to them?
So that's by far, in our opinion, this boost of active ETF adoption. The sole driver is tax efficiency. If you just look at the attributes of the ETF wrapper, tax efficiency of the top three benefits we think is number one. And it does now, as we've shown, fit for both active and passive. And the data shows that. If you just look at last year, active mutual funds, active ETFs, 45% of mutual funds paid a capital gain, 8% of active ETFs paid a capital gain. So the proof is just in the numbers. Across, I think, a taxable account, we're always looking for that tax efficiency. Right. Now you can get active and passive in a tax-efficient manner through the ETF wrapper.
So when we think about fixed income ETFs, right, because there's so many thematic ETFs, so let's break it down a little bit. Fixed income ETFs, what seems to be working?
Right now, we're seeing this ultra short bond category continue to catch interest, and this is more of a risk-off indicator. So you're looking at a 1 year or less kind of total duration of the portfolio. Typically used, I think, in a liquidity bucket as a money market plus type strategy. Right. That is leading in taxable bond flows so far this year. But interestingly, we're seeing also core plus and broader core active fixed income seeing interest this year. I think that speaks to the uncertainty we're seeing from a kind of rate environment and go forward outlook. And again, if you just look at the numbers, the data will show you have a higher probability for outperformance in fixed income by choosing active over passive.
And here you talk about derivative income, 45 billion. Tell me a little bit about that.
So this has been a theme that's been really catching fire for the past 5 years. This kind of need and interest in income broadly. this derivative income category, it's a very uniquely designed product.
I don't think that many people know about that.
Yeah, so if you look at probably like 2020 is when they started coming to market.
Right.
Now we've seen 85 new ETFs in this category just this year. So us asset managers are trying to meet that demand with more supply. But these are just kind of underlying stock portfolios with some sort of option or derivative underlying to enhance the income. You have a high relative level of income. We're trying to aim with our new product coming to market hopefully in December for a more consistent stream of income. So every month, easier to build a portfolio for a client, maybe a retiree that's needing that kind of income replacement because they've left the job market, to give that consistent stream of income to help the advisor kind of predict what that portfolio's income generation is going to be over the long term.
Yes or no? Record year for inflows for ETFs next year?
100%.
Oh, very serious.
Yeah.
Thank you, Matt Camuso. Thank you so much, head of ETF Solutions at BNY Investments. Thank you, Matt. Coming up.